What's up, apes? Welcome back to the 𝗪𝗚𝗀𝗀 daily podcast of the day. Make sure to go ahead and take today's daily poll that's going to be coming out in your Daily Peel edition, and of course, getting your daily protein while reading the Daily Peel. Nonetheless, thank you all for joining us here once again on another edition of the podcast. It is currently 8:18 p.m. on this beautiful Monday, August 5th, 2024. The only thing beautiful about today was the outside weather here at the Daily Peel Global Headquarters. Beautiful day down here in the depths of North Carolina. What was absolutely disgusting was the market performance, and we'll get into that in just a quick second, but I'm sure a lot of you out there watching on the video are wondering, David, why do you look so stupid? Why are you dressed like an idiot? Well, actually, let me educate you a little bit. This is actually a very historical hat. It is a small 10-gallon, almost 10-gallon, maybe 10-gallon hat with an American flag printed on it. I am in violation of flag code, but nonetheless, I felt that the patriotism was needed today because shit's been going rough in the markets over the past couple of weeks or so. We'll get into exactly why towards the end of today's edition. We're breaking out exactly what the hell is causing you to lose all of your money in the stock market right now. But I felt like we needed a little bit of a revival in the American energy going on. So we are bringing that to you here at the Daily Peel, the only news station out here that's going to be bringing you that ever needed revival in the American empire and especially in our stock market. So we're going to be breaking that down quite a bit. And a lot of you might be saying, David, the brim looks a little fucked up. Well, like anything, America's not perfect, and neither is this hat right here, so I think it is a great representation of this country that I was going to say most of us, but I doubt most of you watching and or listening to this are from the United States, but nonetheless, 5% of the global population of you probably are, so this one's for you. All right. Let's go ahead and get into what was going on today. An absolutely disgusting, horrible, make you want to quit your job day in the stock market, and especially for the WSO Alpha portfolio. I've already fired our entire team of analysts. We're going to be hiring some new ones, so I'm going on, down to what's that? DeVry University. We're only taking applicants from DeVry University, so please only reach out if you have a degree from them, and please only do so if it's from the years of 2012 to 2016 when those commercials were absolutely dominated cable TV. But nonetheless, I've fired the entire team. We're completely starting from scratch. We got a new report that's going to be published this week on a great American company, one that we can all really be proud of. None other than Philip Morris International. Yes, the cigarette company that's given millions and millions of people lung cancer. We're going to be reporting them and letting you know what to do with the stock. Then we got an August report on a very small cap company that actually operates in traffic management. So that's going to be a very interesting report nonetheless, but stay on the lookout for everything coming from WSO Alpha. Stay tuned over with that team. Speaking of WSO Alpha, I really don't want to tell you our performance for the day, but in the interest of transparency, we were down 2.94% for the session. Like I said, an absolutely disgusting performance, but shout out to Dollar General for being the only company in the entire portfolio that was up on the day. Fuck Snowflake, they were our single worst performer. Now, with that in mind, we were down 2.94%, still outperformed the market, both the NASDAQ and the S&P 500, and especially the Russell 2000. So NASDAQ was down 3.43%, the S&P down a flat 3%, and the Russell 2000 down 3.22%. Absolutely eviscerating year-to-date returns for the WSO Alpha portfolio as well as the indexes themselves. We'll get into the indexes in a little bit, but WSO Alpha, we are now up just 3.95% for the year. We're barely outperforming inflation, but nonetheless, if you do look historically over the last 5 years, the last 10 years, since inception, we are still outperforming. If you cherry-picked our data from the start of 2024 till now, obviously it would look pretty ugly, but if you look through the whole history of it, we've been doing well. Go ahead and subscribe. You can check our brokerage reports to validate everything I'm saying. We're 4 minutes into this, and we haven't even gotten into the banana bit, so let me go ahead and speed this right up. Okay, so it's not just U.S. stocks that are falling apart, despite my painful patriotism going on right here. Really, very much like the coronavirus, this all began over in Asia, and then it spread to Europe, and as soon as the morning session opened in the United States, it was our turn to experience portfolio hell. The losses have been absolutely ridiculous. I would show you guys my portfolio, but I don't want you all to go blind on the spot, so we're just going to keep on rolling with it. At the same time, Google just lost an antitrust case. Absolutely unbelievable, because I'm pretty sure Google has twice the amount of lawyers as the entire Department of Justice. But when the DOJ pairs up with 38 state attorneys general, I don't know why it's attorneys general and not attorney generals, but nonetheless, 38 state attorneys general as well as the Department of Justice just found Google guilty of operating a monopoly in search and text advertising. We're going to be breaking that down in Wednesday's edition, so make sure to stay tuned for that and our expert legal analysis. The funniest thing about this was that the FTC chairwoman, Lena Walking L. Khan, as we like to call her, she was hired by the Biden administration because she had written some paper in college about how much she hates Amazon. So they thought that she was going to come in and actually be able to regulate big tech. She had absolutely nothing to do with this. The FTC was not on the case at all. This was the DOJ and the attorneys general of 38 states. Now, I'm sure there were some FTC resources allocated to this, but it certainly wasn't the head of the department. Meanwhile, Palantir's earnings actually gave us reason to have hope in the stock market right now. The stock popped after hours on strong earnings, so go ahead and check that out. We're also seeing a boom in U.S. oil production. It's compensating for cuts from OPEC. So the United States, as always, picking up the slack for the rest of the world. Shout out to the 10-gallon hat. Moving on down to our final banana bit. Yesterday's SLOOS report was also giving us hope that a recession might not be imminent, but nonetheless, we know a lot of bad shit is going to be. But we don't have to get into that today. We don't get political or anywhere outside of the market here at the Daily Peel Global Headquarters. But nonetheless, go ahead and check out that SLOOS report and everything else going on in tomorrow's edition. All right, we do have a daily poll on why Buffett is hoarding all that cash, so make sure to go ahead and express your views on that one. But for now, let's go ahead and talk about the Oracle's latest vision. Oracles have played a pretty important role throughout history. You got people like Nostradamus who predicted, allegedly, poetically, kind of like how a psychic is like, you know, like when you go to a psychic's office and they're like, oh, do you have a brother? And you're like, oh my God, I do have a brother because half the fucking world has a brother. That's kind of like what Nostradamus's predictions are, but people read into them quite a bit. Allegedly, he predicted both world wars, 9/11, the Great Fires of London, all that bullshit. He also predicted the French Revolution. In the same sense, the oracles at Delphi, they predicted the Greco-Persian Wars. I personally predicted that I would be a millionaire by age 25. But unfortunately, not all predictions are correct. They actually have to come from a reliable source and not a guy like me who almost failed gym class in my junior year of high school. But nonetheless, we don't have to talk about that here today. My mom's going to get a good reminder when she watches this. The real Oracle, Mr. Warren Buffett, the Oracle of Omaha, dropped his pants this past weekend and let us see all the numbers at his company, Berkshire Hathaway. This is the 8th most valuable company in the world, the largest financial services, railroad operator, Dairy Queen owner, Geico owner, all this different kind of conglomeration of random bullshit. Buffett actually, funny story, because Buffett actually says the worst decision that Berkshire Hathaway ever made was buying Berkshire Hathaway, which was a textiles company that they bought in 1965 and just named the conglomerate after. But nonetheless, the irony speaks for itself. Let's go ahead and see how this railroad, insurance, and ice cream conglomerate did in its latest quarter. Overall, it was fairly solid. If you take a look at this chart right here, what you are seeing are both the company's revenues as well as its operating income. This is total for the entire conglomerate, and we can see that it's moving up and to the right, moving in the correct direction. Operating income also moving higher, although still a little bit lower than the fourth quarter of 2023, but nonetheless still moving in the right trajectory. Now, earnings did beat expectations by about 11.4%. Revenue missed expectations by about 3.8%. But when it comes to Buffett and Berkshire, nobody really cares, especially because most of the reactions to earnings and revenue are just kind of an immediate, like algorithmically driven kind of thing. So Berkshire, by reporting on Saturdays, they kind of avoid all of that nonsense. Record revenue of $93.65 billion. This was primarily helped out by what Buffett has referred to as his quote-unquote favorite child before. I'm sure his 3 actual kids absolutely love that analogy. But nonetheless, that is Geico. The insurance business was looking great. The insurance business isn't only Geico. It's it is Geico mostly. They're the largest segment of it. And then there's Berkshire Primary and Berkshire Reinsurance Group. And all of those were looking pretty good. Now, total insurance revenue grew 7.7% for the quarter. We also saw Geico absolutely explode its operating income. It was up more than 200% compared to the same period last year compared to Q2 of 2023. That clocked in at $1.79 billion for the current quarter, $514 million for the same quarter last year. Very solid performance by Geico, once again, Buffett's favorite child. Total insurance revenues grew 10.8% across the 3 different segments of it, but the firm has not been working on the railroads lately. I don't know if they just didn't hear the song, if they missed that day of preschool or what was going on there. But nonetheless, they completely slipped up over there. Berkshire, through their BNSF subsidiary, they own 32,500 miles of track in the United States, and revenues fell 0.4% for the quarter. Other kind of more industrial units also saw weakness. So we saw weakness from the truck stop business. It's called like Pilot Flying J truck stops or something like that. I'm sure there's some kind of a story behind that, but it just kind of makes me want to smoke weed in a plane, you know, Pilot Flying J. That's exactly what it makes me think of, which is always a great reason to name a business after. But nonetheless, their revenues were down 11.9% for the quarter. This distribution unit was down 3.3% and its retail unit down 1.91%. If you want a bird's eye view at all of the segments, do go no further than looking at your screen if you're looking at the video, because this is breaking down all of their different reportable segments except for one key one that we'll get into in just a quick second. So this is what it was looking like. Pilot was the worst part, down 11.9%. Berkshire's primary insurance group had the strongest performance, up 9.99%. I guess we can round that up to 10 and call it double-digit growth. But nonetheless, it was overall a decent quarter at Berkshire Hathaway. But again, hardly anybody cares about this stuff. Now, we can read into this a little bit because Berkshire is such a conglomerate and basically say that it's a play on the U.S. economy. Now, they don't have any exposure to, or any meaningful exposure to, you know, cloud growth and artificial intelligence besides investments in firms like Snowflake and a couple others like that. But it's small potatoes. It doesn't really matter for the overall business. What we are seeing is that the insurance fund is doing well and its actual kind of industrial side isn't performing quite as strongly. So that's generally not a great omen for the U.S. economy. But again, like we talked about yesterday, we're coming out of this Goldilocks period. So it's not necessarily bad. It's just a little bit worse. Now, the company's manufacturing division was looking good, up 3.86% for the quarter, which is ironic given that the ISM manufacturing report just had one of its ugliest reports in the past couple of years. The insurance stuff starting to increase means the revenue starting to increase means people are paying more for premium. So, you know, things are getting a little bit more uncertain. This is all stuff that we knew, but again, it's just kind of confirming our biases already. The U.S. economy is absolutely slowing down. People are getting a little bit more nervous, but underneath all of it, we're still holding up relatively strongly. Now, what people do actually care about when it comes to Buffett and Berkshire is their investment portfolio. And let me go ahead and show you guys this right here. What we're looking at is ironically not my heart rate when I woke up this morning and looked at my portfolio and saw all of the massacre of losses that were going on in there. This absolute skyrocket is Berkshire's cash balance. So this is combined between their insurance unit, their railroad, energy, utilities units, all that different kind of stuff. And what we're seeing here is that over the past year, Berkshire's cash balance has grown 87.91% and 46.53% over the last quarter, amassing a total enormous amount of $276.94 billion. So about $277 billion in liquid cash currently sitting on Warren Buffett's company's balance sheet. Now, this is the single largest cash holding that any S&P 500 non-bank company has ever seen on its balance sheet whatsoever. So Berkshire now owns a record for the longest reigning CEO, the oldest CEO in the S&P 500, and the most cash ever. Congratulations to them. That is pretty impressive. But what's not impressive is exactly what triggered this kind of a performance. So to amass such a pile of cash, obviously Buffett and Berkshire have been dumping stocks like never before. Now, at the end of 2023, there was a massive $332 billion sitting in the company's equity portfolio. It's still at a huge cash balance of somewhere around $100-something billion, but it's nothing like what we're seeing right now. We talked earlier this year about the company selling Bank of America. They also recently have been selling American Express, Coca-Cola, some of the company's key positions. But this last quarter, well, really the first half of this year, a major development has come underway. So Buffett's absolute favorite stock for his entire career has to be Apple. Now, he hasn't come out and said this, but it's clear that it has been. It's been the company's largest position since fucking Vietnam. That's probably literally true, but it's been the company's largest position forever. They own like 7% of the company at its high point, but that is not the case anymore. In the second quarter, Berkshire cut its Apple holdings by 55.8%. That was really throughout all of 2024 so far. They slashed their Apple holdings by 55.8%. In the second quarter, they slashed it by 49.4% because for the first half of this year, they only cut about 12.7% of the holdings. But nonetheless, they are completely dumping Apple. Berkshire has sold more than half of its position in 2024 so far. Again, they've sold 55.8% of the position they held on December 31st. 2023. Crazy stuff going over there. I certainly hope that they have been continuing to make sales, especially before yesterday's 4.8% decline in the kingpin of Cupertino. But nonetheless, that is where all of this cash is coming from. They're completely dumping shares in Apple, dumping in Coca-Cola, dumping in American Express. But quite honestly, I don't think investors are too mad about it. If we take a look at this chart, what we can see here is the interest, investment, and dividend income that Buffett and Berkshire have earned, absolutely skyrocketing, more than doubling since the beginning of 2022. Most of this is just going balls deep in treasury portfolios and collecting that yield while Uncle Sam taxes the shit out of us. It's a great Ponzi scheme that they got going on right there. You pay taxes, then the government pays you back your own taxes through through interest payments on your bonds. Brilliant. Great idea. Charles Ponzi himself probably couldn't have come up with that. But the big takeaway here is kind of what we described already, confirming our biases or confirming our priors about the U.S. economy. But what we can also take away here is a question, not necessarily an answer, but what does Buffett see? Now, Buffett is very famous for a lot of quotes, but one quote that came to mind in this was, never bet against the U.S. economy. Now, selling stocks certainly isn't betting against the U.S. economy. The guy isn't going short Apple or short the S&P 500 by any means, but by selling, that's kind of like going short for Berkshire, especially when your favorite holding period is forever, as Buffett has famously stated. So if he's selling, he's clearly seeing problems out on the horizon. This is very unusual activity for Berkshire, and you could say that it's just Apple's valuation. It's just because iPhone sales are falling, but why is he selling Coca-Cola? Why is he selling American Express? Why is he causing an absolute massacre among all of my favorite stocks? But we're going to have to wait a while for that answer. Clearly, he is on edge, and I'm sure shareholders were too after this latest report. All right, let's go ahead and move into some of the big stock movers of the day. 16 minutes in. Holy fucking shit. What is wrong with me? Anyway, Tyson Foods up 2.1% for the session. Yes, that is the leading what's ripe stock of the day, because finding a stock that was up yesterday was like finding raindrops in the middle of the desert. Like, it was absolutely not happening whatsoever. We could pray, do rain dances as much as we could, and the gains simply were just not there. Nonetheless, Tyson Foods did its best. 2.1%. This company is the most famous animal abuser in the entirety of the United States. And to bet against the love for meat in America is kind of like betting that the Secret Service would fail to protect a sitting U.S. or a former U.S. president. Oh, wait a minute. Fuck. Never mind. At least, one of those bets would have worked out. If you bet on Tyson instead of betting on the Secret Service. Nonetheless, this meat giant, excuse me. I keep messing up. I'm tripping all over my words here today. But this meat giant did post solid Q2 numbers. So they saw 1.6% growth overall. They saw strong performance in their poultry unit, very much improved the operations on that side. The beef segment is still seeing weakness, and they're still losing money in their pork segment. But nonetheless, it's not about good or bad. It's about better or worse. And Tyson was getting better for the quarter. They actually saw their overall profit between all their different segments swing from an enormous loss last year of $417 million to a $191 million profit for 2023. Or for 2024. Fuck me. Jesus Christ. All right. Moving on down. Advanced Micro Devices, aka AMD. The stock was up 1.8%, while the rest of the tech market was at the bottom of a barrel, like the last fish in the barrel, just waiting for that bullet to go through its head. That's what the rest of the tech market was doing. AMD was standing there holding the gun. 1.8% up on the day. It's because Intel is fucked, because of how shitty Intel's last report was and how the stock fell like 27% in a single session. Analysts are starting to say, okay, AMD is going to eat Intel's lunch. They're going through this big lumbering corporate restructuring that's going to take quite a bit and delay production of the most advanced chips. So analysts are starting to worry that Intel's longtime lovers like Dell and HP are going to revert to AMD for their chips. What do I have right here? I'm using a Lenovo, and I have an AMD Ryzen Pro 5. Maybe somebody with a brain can tell me what that means, but a good day for AMD. All right, what's rotten? A company I'm sure a lot of you would like to work for. We have Carlyle Group down 7.5% on the session. This is J-Pow's alma mater, and the stock was falling faster than confidence in the Federal Reserve after July's jobs report last Friday, because the private equity market is fucked. This is not necessarily just a Carlyle Group problem, but getting an exit in the private private equity space has been almost as difficult as getting a job in the private equity space lately. And so that's been quite the hit to distributable earnings, especially here in the second quarter in 24. It only got worse compared to the first quarter from what we could tell. Now, they did report a 32% jump in fee-based earnings on a 13% jump in assets under management. But like I said, tough exit environment brought down distributable earnings by 11.8%. So a relatively tough session. Now, keep in mind, during the first quarter, we saw a 22% year-over-year decline in exits. So it's likely just linked to that. It's not necessarily an idiosyncratic problem for Carlyle Group, but just a problem for the private equity space in general. If you work in the space, make sure to write in with us. Let us know what I'm missing, and let me know what we should be talking about so that I can spread the news to the entire world. Okay, moving on down below, we have Coinbase down 7.3%. You know, God, I was really feeling optimistic until yesterday because, you know, we got multiple wars going on all over the world. We got economic slowdowns on the horizon also all over the world. We also are seeing fraught elections all over the place. We saw Pete Davidson and Madeline Klein break up. The world is just completely falling apart, if you ask me. But you know it's really bad when Bitcoin prices start to fall. Now, this is the asset, not even a good asset. This is the asset according to the virgin loser crypto bros who pump this stuff like they should pump their own fucking incomes. But nonetheless, Bitcoin prices have been taking a tumble quite a bit. The asset, quote unquote asset, is down 26% in less than a week, falling to below $50,000. At the time of writing, we were trading closer to $49,000, but right now we're starting to pick back up a little bit. Now, this caused the world's most rational investor, probably the most rational investor since Ben Graham wrote The Intelligent Investor, Miss Cathie Wood. Obviously, nothing but respect for her and especially her valuation techniques. She was dumping Coinbase stock on the same day, so kind of getting hit with the double whammy from both the digital asset side and the real asset side. So obviously it was a tough day for Coinbase. All right, let's finish it up with a quick story. Just a quick, come and do drugs with me, if you will. We're going to sit here and take a chill pill together. That was not permission to hit your dab pen, but if you do have one in your hands, I implore you to please do it because we all need to chill out. I'm really starting to feel like Dave Portnoy once 2022 hit, because we all know that the esteemed legendary hedge fund Davy Day Trader Global is one of the best to ever step onto Wall Street. But much like Davy J Trader Global, I forgot that stocks could go down. And now this past week has been a brutal reminder of that. I fucking forgot to change the charts once again. So I'm going to wait a second before I do it here. But nonetheless, we know that the past couple of weeks have been particularly tragic for the S&P 500, the NASDAQ, the Russell, anything with the fucking dollar sign in front of its name on Twitter. It's been completely horrendous for you, unless you're Tyson Foods or AMD, I guess. But this is what the market has looked like so far in 2024. This is as of close on this beautiful Monday, August 5th, 2024, and what we're seeing is an absolutely disgusting performance starting around the end of July, right around the time that Pete Davidson and Madeline Klein broke up, actually. So I think that we know that that's actually what's going on. So, despite the fact that Pete Davidson's heart is broken, I think my portfolio might be broken a little bit more, and my Google Doc is fucking broken here too. Okay, perfect. It finally loaded back up for me here to remind me of what we're talking about. Let's go over some of the numbers. Since July 16th, the S&P 500 has gone from a year-to-date return of 19.51% to 9.46%, officially entering correction territory, even if only by 5 basis points. The small cap Russell 2000 index currently sits in a drawdown of 9.91%. Worst of all, the large cap NASDAQ 100 index, this is the largest companies in the S&P 500 that are not financial services companies, that's the NASDAQ 100, is down 13.45% from its high point, as we can see right here. Brutal, absolute massacre going on Wall Street over the past couple of weeks. So let's talk about why. There's really two obvious questions that emerge from this. Why is this happening and how fucked are we? Now, that first question we can talk about a little bit. We can't really answer either one of those definitively, but there's at least 4 reasons that the stock market is selling off right now. Weaker than average earnings season, worsening economic data, a politically charged news cycle that's just spreading bad vibes to everybody, and brittle valuations finally breaking down. Those prior 3 essentially feed into the last one because valuations are all about confidence and optimism. Keep in mind, markets are a game of probabilities. They're not a game of certainties. So when economic data worsens, when earnings start to worsen, when you have a former president getting shot and everybody just fucking pissed at each other, as angry as each other as if we're all just cutting each other off on the highway all the time. That's what it feels like when you go outside. Obviously, that's going to make us a little bit less confident in the performance of our companies going forward. So that's really what's going on right here. It's just kind of feeding into breaking those brittle valuations. But unfortunately, when we talk about how fucked are we, that's basically an impossible question to answer. Now, what we can do is point to history and talk about how unusual is this. Turns out, not unusual whatsoever. The unusual part was this, how long we've been running up with really no challenges along the way. So July 23rd was the first more than 2% decline in the S&P 500 since February 21st, 2023. That is very unusual to go more than a year without a 2% single day pullback. I know 2% sounds awful at this point, but it's very unusual to go that long without a pullback to that degree. So A little bit weird, but nonetheless, the sell-off obviously sucks, but it's nothing to cry over. It's like spilled milk. Yeah, it fucking blows. You gotta go fill up another glass. You gotta go buy more stocks, but nonetheless, it's really nothing to cry over. If you're under the age of 40, this is a good buying opportunity, or it could be a good buying opportunity. This isn't investment advice, but don't cry over spilled milk. 94% of years, the S&P 500 has seen a drawdown of at least 5%. That's not to say in a single day, but that's just to remind you not to freak out right now. This is where the apes are separated from the analysts. So which side do you want to be on? I think that's actually a great way to end it. Our big question of the day is, are you buying this dip? We have a quote from Mr. Peter Lynch himself, a great former investor and portfolio manager over at Fidelity. And he said that everyone has the brain power to make money in stocks. Not everyone has the stomach. Go out there and show your stomach. Take your shirts off on the trading floor. I think that's what Peter Lynch was advocating for right now. And we'll call it a day right there. Let me give the tip of the cap to everybody listening. And please don't look at my hair after wearing this hat for the past 25 fucking minutes. Jesus Christ. Let's go ahead and end this. It's 8:43 p.m. Thank you all for tuning in. Happy investing, happy trading, and we'll see you guys tomorrow. Bye now.